Hey, soldiers. The media is carrying the water for companies like Blackrock and for organizations like the World Economic Forum. They are trying to convince you that ownership is bad, that subscribing to or renting everything you need in life is a better model. Now, of course, that helps BlackRock because they invest heavily on behalf of their clients in residential real estate. CNBC, a major media outlet, has come out with an article why buying a home is usually a terrible idea. But is it? Now, of course, I could buy a home in some place like Baltimore City where the political leadership is populated with a bunch of children, a place where 1% of the population was lost in 1 year, 2020 to 2021, a place where the crime is just off the charts. Now, sure, that might not be a savvy investment. I admit that. But this article from CNBC is painting with a very, very broad brush. And it has a tone such that it's trying to castigate the concept of ownership and promote the idea of renting the place where you live. Why is that? Isn't home ownership a path to wealth in this country? Hasn't it typically served as it has? And we're going to go over that. So it is my belief that CNBC and the media in general is carrying the water for these major organizations and trying to keep you in a situation where you fail to capture financial independence. That is what they are doing.
Yeah, right. Grizzly Adams had a beard.
Grizzly Adams did have a beard.
All right, let's start out with this article. It's in CNBC. I will go ahead and link to it for all it's worth. I know I say I'm going to link to something a lot, and I fail to do so. So this one I'm going to do. A lot of people will tell you that buying a home is a good investment, but that could not be further from the truth, says Peter Maluk, a certified financial planner and president of wealth management firm Creative Planning. He says, in reality, it's usually a terrible idea. Wow. All of the homes that are sold in this country, it's usually a terrible idea, he says. That's because at the end of the day, owning a home takes money out of your pocket. You're paying property taxes. You're paying maintenance. You're paying insurance. There are all of these other things that happen with your home that you've got to pay for. Yeah, Pete, imagine that. You have to be responsible financially for something that you bought. Revolutionary, I know. With regard to the property tax piece, listen, don't talk to me about property taxes unless you're willing to first have the conversation with your elected officials on the local and state level. Because the people that you buy your home from or the people that construct your home, they don't have any say in that. These decisions are made by politicians. So that's that one. You're paying maintenance. Yes, indeed, you are paying maintenance. I guess he prefers the scenario whereby you call management at the apartment complex and they come up and fix your water heater. Yeah, you're going to pay for maintenance on your home. That is why it's a good idea to practice preventative maintenance and keep things in good working order so that you won't have to pay more for it. It is an asset. And I know that some of the financial gurus say that no, owning a home is not an asset. It is an asset because you can get tax benefits from it. You can leverage it, borrow equity from it while still living in it. Okay. Those are things that you definitely can do with a home. And let me say this before I forget. With a home, keep in mind when you are paying a mortgage, let's say when you're paying a rent and you get into some financial trouble, you got 30 days, buddy. And then if you still can't solve that issue, an eviction process is going to take place and you're going to find your stuff out on the street. Our company has handled foreclosures for some of the major institutions. And let me tell you, that is a process that it literally can take, in some cases, in one case in particular, it took about 10 years. Not our case, but another one we read about. But in a lot of cases, that's a process that can take years. That gives you time to maneuver. You don't have that as a renter. All right. So, yes. And you also are going to pay insurance when you purchase a home, when you have a mortgage. Now, let's look at this in comparison to renting. Rents go up each and every year, all right? Rents constantly increase. There is no point at which a rent will not increase in most cases, especially if you're living in a place that is managed by a professional management company. Pete goes on to say, over time, your home might increase in value. And it's true, it might not. Usually, real estate has increased, but it's a hyperlocal market, so it's not guaranteed. But let's also not discount the fact that you've got a roof over your head if you've got a fixed mortgage at a steady payment. Okay, again, not counting for taxes. We don't control those. Pete says that your mortgage your value of your home probably won't appreciate enough to offset all of these costs. I don't know about that. Instead, if you took what you save from not buying a house and invested it in something that's likely to grow in value, such as stocks and bonds, chances are you'd end up with more money in the long term. How's that possible if you're living somewhere long term and the rents continue to spike year after year after year? All right, here's some meat and potatoes for you. He says, say you live in Brooklyn, New York, and pay $2,500 a month in rent. All right, so I thought it was pretty affordable for Brooklyn, New York. So I actually went and I took a look at how much it costs to live in Brooklyn, New York. The average rent for a one-bedroom apartment in Brooklyn, New York is currently $3,844 per month. This is a 51% increase compared to the previous year. Hey, but you're saving on maintenance and insurance, right? 51% increase year over year. He goes on to say that you could have put that money. His whole argument now is just totally BS, because the average rent up in Brooklyn is not $2,500. Okay, so sure, you might be able to find a closet for $2,500 in the worst area. Okay, where you have to put on body armor to come outside to go to the store. But most people up there are paying $3,800 or more in order to rent their home. Now let's take a look at the average price to purchase up in Brooklyn, New York. All right, so the average purchase price in Brooklyn is $500,040. If you go out and you get a 30-year fixed mortgage at 6.07%, it's going to cost you $3,263. This is a 30-year fixed mortgage, okay? So that's already going to cost you less than the $3,800 and change that it costs to rent. And keep in mind that figure that we just went over, and this was compiled by Zumper, their real estate data tracking service. They already told you that rents went up 51% year over year, 2020 to 2021. Okay, so, and it's probably higher than that right now as New York starts to get back to normal, and people a lot of people like the urban, big city life. They find it very convenient. I'm not one of them. Give me this, peace, quiet, four-legged animals as opposed to two-legged animals. So we've debunked that whole argument. You're not going to be able to find anything up in Brooklyn that's $2,500. All right, so he goes on to talk about how if you put it in a mutual fund and blah, blah, blah. But again, we're talking about steady increases in rent that are going to eat up quickly any saving. That 51% jump, that might have eaten up all the savings that you had accrued for 2 or 3 years in terms of saving on insurance, maintenance, and property taxes. And let me tell you this, you're still paying for insurance, maintenance, and property taxes. It's just that it's called rent. So you're not paying your mortgage, but you are paying a mortgage. And you saw how with the rents on average being $3,800 and change, and a mortgage on that one bedroom was, what did we say, $3,200? You already see how the landlords are building in profit, which they should. So you're paying their mortgage in a rental situation. The rents are steadily being raised. Everybody expects that. And on top of that, you're paying a premium because they want to make a profit. And this is supposed to make sense. You're supposed to go out and do this so that you can save a little money, save a lot of money maybe, is his argument. But again, over the long term, over the short term, we've seen that second year in, you're already ahead of the game buying. Imagine how much money you'll be able to put away into other assets in the event you do not have to pay this increase in rent. All right, so by renting, you also miss out on a tax deduction, which is the mortgage interest rate deduction. And you can use that deduction for the first $1 million of your mortgage interest in any given year. Let's see. I got some other notes here. Okay, that's pretty much it. But look, these guys, they don't care about you. They put this information out in the news media and people just consume it. Here's one other guy. If you run the numbers like me, you might discover that for where you live, it actually makes no financial sense to buy. Okay, it very well could be geographically dependent. Again, I wouldn't buy a damn thing in Baltimore City. I would not live in Baltimore City. I lived in Baltimore City. I love Baltimore City, but again, they're running it into the ground. Now, down near the end of the article, where most people don't read, CNBC does say one major benefit that comes with buying a home is that it can be a type of forced savings, because by making monthly mortgage payments on a mortgage, you're using money in a constructive way by putting it into an asset that you could sell later. And when you sell that home, depending on how it's structured, you have to talk to your CPA. There could be a chance you could use a 1031 exchange in order to have the IRS treat you favorably when it comes to taxes you might otherwise have to pay on the sale of a home. You need to look into that because that exists. You can't pull that trigger if you're renting, okay? You get your security deposit back. How much is that? Let's say you stay in the apartment 5 years. They put your little security deposit in a bank savings product at 1%. Inflation continues to roar at, let's give it 5% per year after things kind of settle down, which they will. So you're getting a check back that's worth less than you gave them, all right, in the form of that security deposit. Now, the other thing is, some people are in situations where they're working a particular type of job and they're not going to be in an area for an extended period of time. It probably doesn't make sense for them to purchase a home in that area. Okay, I get that. Then again, it might, depending on, some other factors. You have to do your due diligence and decide. But listen, take these folks with a grain of salt when they come at you with stuff like this. Are they clearing the path for Blackrock? Are they trying to pump up investment dollars for their sponsors by saying, hey, go ahead and invest that money in the stock market? Stock market is not the only investment. Your home is an investment that transcends economics. And the reason for that is because it is a roof over your head. It's a place you raise a family. Okay, at the end of the day, we all have to have a cave that we come back to. And wouldn't it make sense for that cave to also serve as something that is advantaging you economically? According to a recent study by millionacres.com, the average year-over-year home appreciation rate is 14.5%. Now, that is dependent on a lot of factors. Again, real estate is a hyper-local market, so what's good for, your house may be a totally different story for my house. But that is a roundabout figure. And if you take that 14.5%, it is greater than what inflation has typically run at. We can argue that 14.5% is a few points less than true inflation as calculated prior to 1980. But, folk these days would argue that 14.5% is more than the 9.1% inflation that we just saw reported here a few days ago. All right, guys, now I want you to take a look at this video. It's going to walk you through exactly how to interpret the unemployment numbers. This is important information you need to know. Don't leave this up to the news media to report to you. We just did a whole video on why you shouldn't do that, right? So go check the video out. Guys, I'll talk to you soon.